Now it's time to head over to our KYC segment, the Know Your Company segment. And today, like I pointed out, the company that we are going to be talking about is Coal India. And Coal India has actually turned out to be a great outperformer vis-a-vis its past performance. In the last 1 year, the stock is up by about 90-odd%. Even on a year-to-date basis, a 17% increase is what we have seen. And on a multi-year basis, on a 5-year basis, again, the stock has been continuously seen rising as well. Especially, it's been a one-way move from the second half of last year all the way up till now, and there is no let up in the kind of rally that we are seeing. Of course, it's a government-owned company. We do know it's the largest coal manufacturing company and coal producing company in India as well. Recently, the earnings also came about, healthy set of numbers from Coal India. Operational performance was largely in line, and the outlook also looked positive. Robust volume also outlook. Also, healthy e-auction premiums are being seen, lower costs. So all of those are working positively for Coal India. First up, Ashish, an overall view on Coal India, the way it has performed over the last 6 months, 1 year odd. How do you see that?
Again, Coal India is a proxy play to power sector. They are not generating direct power, but 80% of total power generation on India is using thermal power. And Coal India is selling 90% of their products to all these power companies. So, till the time you are bullish on power sector, you can't say you are not bullish on Coal India. Besides this, whatever the target of 838 million tons of production in FY25, what they have targeted, I don't have any apprehension why they're not able to achieve if any natural issue, natural calamity, etc., come or heavy rains, etc., comes. So the next year is going to be another record profitability year for this company. They are having already EBITDA to per ton, almost 500 rupees per ton, which is quite promising. And valuation wise also, I'm finding it, if you see EV to EBITDA, this is available at just 5 times FY26 earnings. So my thumbs up also to Coal India. In my view, stock should be 500 to 525 once this consolidation phase gets over.
Okay, once the consolidation gets over, the stock could be in for a fresh rally, and you could look at levels of even 500, 520 odd levels coming in. How do you assess the overall earnings? Where do you see the levers for growth going forward, and where do you see still challenges persist for Coal India, sir?
So, as far as the challenges are concerned, only thing is there shouldn't be rain and all these infrastructure issues can come because they operate mines in remotest part of the India. So that is the only challenge. I don't think so. Demand wise, any is going to be any problem. Like you rightly pointed out in the last quarter, they have done cost optimization. At the same time, e-auctions are getting a high premium because demand is so high of power, and it is going to continue because the way industrialization is going up and this election time is there, so everybody want to give full 100% power till that time, and post that also there's part of a lot of manifestos that every village will get power and all. So next 1 year, I don't see any challenge for Coal India as such, and margins are going to improve. In fact, quarter over quarter in coming time too.
Okay. Any risk from the rising focus on renewable sector, sir, from the government, from companies which are expanding their presence in the renewable space, and of course the climate change kind of issues that we are facing, and of course our net zero emissions kind of a target that we have set as a country for ourselves in the long run?
So that net emission zero is 2070. So this is quite a long target that India has taken. It's not like 2030 what is there for many European countries. And there's always net zero. It's not something like coal will be zero. At the same time, there's a difference there. So so I don't think so. This is going to affect companies like Coal India because we must understand the 80% of India's power is still thermal power, and we'll continue to produce because like all new capacities may be coming in solar space, but it will take plenty of time because the way power requirements are going up, even solar power can't meet those kind of numbers. And solar is not something that is available in all part of the country. Wherever you are having sun intensity, there only you can put solar power. So they have all other natural or renewable sources have own limitations. So you need to be in coal space, coal-fired power plants. So that is the reason I am quite bullish on this.
Right. But how do you explain that and do you believe that it will have enough moat to outperform its peers in this space? Of course, it is the largest player that we know. Beyond that, say for an NTPC, a power grid, the other peers in the power space, how do you see the outperformance of Coal India continuing?
So there's an entire value chain. See, Coal India is a coal producer which has raw material. NTPC is thermal power generation. Power grid is power transportation, transportation business. So PFC, REC are in power financing business. So it's a big value chain, if you ask me. So nothing is comparable as such that valuations are high or low. Only thing is it's a commodity play, pure commodity play. So your valuation can't be you can't give valuation of 30, 40 price earning multiple. But even at this price earning multiple, what I told you, EV to EBITDA of 5 looks attractive.
Looks attractive. Also, sir, wanted to just understand, in the vis-a-vis the past, when Coal India was just seen as a pure play dividend investment option, what has suddenly changed over the last 1.5 years? And whatever is working for Coal India, do you see a sustaining move, especially in the stock markets front? We do know that the earnings are continuously improving, but will the outperformance in the stock markets continue in the long run?
See, in order to achieve outperformance in stock market, you need to deliver higher earnings. This is the only formula why a stock price goes up. So if there is a visibility that you will continue to do well, you will continue to grow at 10% CAGR because on this size of company, even such growth is quite high because company last year did almost 36,000 crore profit, and I'm expecting similar line of profitability this year also. So, in my view, the dividend play was something like which was applicable when stock was at 225 to 30 level. Now we are seeing such levels where dividend yield really doesn't matter. It's all about capital appreciation while investing in this stock. So I am more bullish as far as stock price performance is concerned instead of dividend yield. Dividend yield is just a bonus for Coal India shareholders.
All right. So the prospects look bright and shiny, and Coal India could continue to power your portfolio in case you're looking to invest in it. Even now, a higher targets coming in after the consolidation, 500, 520 in the medium term is already what Ashish has shared with us.